Why this supply respected? And why this demand failed? The answer is simple. It's because the supply was valid and the demand was not. But that's only the answer. But now let's get into how we got that answer. Here, for example, we had this downside movement that was followed with a push to the upside and then a downside pullback. So it looks to be a price action that's following an uptrend. The market will pull back into a demand that was formed from the previous pullback, right before the price started going up. And it's on a demand where the pullback on an uptrend will often end, because demand levels are a support to the price, meaning that when the price gets inside of a demand, that demand will a lot of times push up the price into higher levels, above the last high. The important part is that it must break above the last high, because when it does so, that will validate another demand on the next pullback. And the demand, to be more specific, is the last downside candle before the market started going up. But what I said, what's important about this upside movement is that it must break above the last high, and it must break with a candle closing above the last high. Here we see that it happened, and that's why this demand is valid. Now the thing is that from this high, the market pulls back down, then it starts bouncing up. So this pullback did not manage to get into the demand, moment where most will just forget about that demand and look for another one. But from where? From the last downside pullback before the market recently started going up, and they identify this as the new demand. But the problem is that so far we did not break above the last high in order to validate this demand. Then the market continues going up, then falls down and hits into that demand. So of course a lot of buying positions will be opened from this demand, waiting for an uptrend continuation, so for the market to break above the swing high. And as we can see, that worked out well since the price pushed into breaking that high, so the setup ends on a win. And now because of this break above the high, this validates the next demand taken from the last downside candle before the price started going up. And this is the most recent demand the market has left. And the price pulls back down and hits into the demand. Now we plan a setup similar as we did before with a buy on the demand, in hopes of uptrend continuation, basically for a break above the swing high. And this time the price blows through the demand, stopping the position out on a loss. Now if you are to look at the recent swing points, we see here for example that we're having a higher low formation coupled with a higher high formation. Those are swing points of an uptrend. But then this latest push to the downside breaks below the last low, and so it creates a lower low. So if the last low broke down into a lower low, this demand breaks down, and that means that it's now invalidated. And because of the break into a lower low, you would call this downside break as a trend change or market structure shift from an uptrend into a downtrend. A downtrend is a price action that forms a lower high that is then followed with a lower low. And this lower high gives an opportunity for a sell setup from a supply level taken from the last high before the market started the push to the downside. But you need to think, is this really a downtrend? If you pay close attention, this low bounced from the demand that was left behind, which was also the only valid demand we've identified. This demand was created from this push to the upside that broke the last high, and compared to the other demand from above, which was not valid, even if it has worked out well, was not a valid or high-quality demand, because the market did not break above the last high. Remember, it's the break above the last high, the action that validates a demand, which from this one it didn't happen. And also from the next demand, this was also not validated because the price breaks above the last high, but it breaks with a wick and not with a full candle. This invalidation was also seen from what happened next, which was that it broke it down and lost that setup. And interestingly enough, the market breaks down that invalid and fake demand and drops down into hitting the only demand that was actually valid, which was this one. So this downtrend was not really a downtrend, it was only a pullback, so the market can fill the valid demand. And we can even try with another buy setup, this time from this demand, with the stop loss below it, and take profit above the swing high. And as the position has basically already been opened right here, we just need to have patience. As we see that after hitting the demand and opening the setup, buyers start pushing up the price. You can even see the buying pressure from how much larger the upside candles are compared to the downside candles. And this reaction causes this break above the last swing high, which closes the position on the take profit, breaking above the last high with a full candle above it. Here we start with a small push to the upside that is then followed with a downside movement, and this breaks below the last low. Now we see that it first breaks here, but this is not a valid break because it has done it with a wick, and the actual valid break is right here when the candle closes below the last low. So after a valid break of the last low, the price should also validate a supply taken from the last high, more specifically from the last upside candle, before the price started the impulse to the downside, and in this case it perfectly respects the theory, because we can already see how the price pulls back to the upside, hitting the supply. Now when we have valid supply levels, the setup planning is to sell from the supply with the stop loss above it and take profit below the previous low that caused the break. And this perfectly worked out since after hitting the supply, the price crashes and of course that triggers the take profit. Now if we analyze the price action, we see that it breaks below the last low. But again, the valid break is not here where it has done so with a wick. But the valid break is right here since it has done so with a candle closing below the last low. And now it repeats the same story. So if the last low breaks down with a valid candle closing below the last low, this validates a supply taken from the last high. And the supply is the last upside candle before the price started going down, which should be around this level. Now from the swing low, after this aggressive push to the downside, the market starts pulling back up, then pushing back down, and this push to the downside has broken below the last low. Now after a break of the last low, the price will validate a supply level taken from the last high. Supply that, if we test a sell setup from it, we see that it doesn't end up well and it closes on the stop loss getting hit. This loses the setup since the price pushes to the upside and breaks above the supply. Now if it breaks above the supply, that also means that it breaks above the last high. So we went from forming lower highs into now forming the first higher high. So can we call this as the trend change from a downtrend into an uptrend? Well, let's see. So if this supply is broken, that means that it's now not valid. So we can get rid of it. Also on an uptrend, we look to identify demand levels. They are the last downside candle before the market started the impulse to the upside. Now the price keeps going up and it hits into the supply. Now the question is, which one is valid? Because we have a supply, which is an entry structure of a downtrend, but we also have a demand, which is an entry structure of an uptrend. So they're self-conflicting. Where we need to look for confirmations are these two, on the break of the low and on the trend change. If we look at this break of the last low, this happened with a wick and not with a candle closing below the last low. So this is not a valid break. And if the break is not valid, that also means that the supply from above was not valid. So if this supply didn't even exist in the first place, because the market didn't break the last low in order to validate it. So if there was no available supply, that means that this push to the upside didn't break a valid supply yet. And if a supply didn't break, there's no point in thinking that they will stop validating. And since this is the only supply that's still valid, unless this breaks, it's still valid for now. So this logic favors the supply more than the demand. And we can try with a sell setup from here, with the stop loss above the supply, which also is above the last swing high, and the take profit below the last swing low. It continues to go up, but it's still inside of the supply. The rejection happens, and the price is pushing down. Right now, it is hit into the demand, so let's see what happens. And what happened is that the demand breaks down. So that means that this trend change was not really a trend change, but was rather a pullback, so the market can fill a supply that it was left behind. But what about this demand? Well, that demand is not valid because we did not have a break above the actual swing high of the valid supply. For that demand to be valid, the price should have broken above the valid supply that was left behind. And it's only after it breaks when we can look for a demand on a potential pullback to the downside, so we can plan a buy setup from the now valid demand and take this market into an uptrend by constantly breaking the highs. I go in deep details on the program linked in the description if you want to take a look at it, where I have a bunch of materials helping you properly understand the price action, so you can start winning, but also most importantly, not losing the wins back.